Today we look at the dollar, gold, and euro. We had quite a lot of news coming in last week, and this week is the first week of this new month in September. We have, of course, NFP at the end of the week. My name is Samson Mzera, and welcome to this new month and this episode of the Market Watch series, where we cover the markets, the news, the charts, what to look for, and what to expect. So be sure to subscribe and share for more. Last week, we had the US GDP coming out, and the GDP for the second quarter of the US came in at 3%, which was higher than what was expected. And this, of course, gave investors that confidence that we're not heading into that recession. Remember, at the start of last month, there was a lot of fears of the US heading into a recession thanks to those jobs numbers that we received that were very low. But now this is improving sentiment, and we again talked about this in quite a number of episodes, that the focus is now starting to shift from inflation to the state of the US economy. And things like GDP, things like employment numbers are starting to take the center stage over the inflation readings that we've been seeing. And for this week, of course, we have the NFP readings. But before we look at that, let's have a look at what else happened last week. At the end of the week, we did have the core PCE numbers coming in. And this is one of those gauges the Fed usually or regularly looks at when judging where inflation is heading to. And of course, even that one came in lower than the previous. So it came in at around 2.2%, which is lower than the previous reading. And this just reaffirmed or reassured the market that we are now finally going to see that cut. Now, the market is already certain about having a cut in September. The only conversation again switches to what or how aggressive are those cuts going to be. And by the look of things, if the US economy continues to show signs of health and resilience, then we're likely not going to see aggressive cuts, and that is going to at least support the dollar. So yes, you're going to see a cut, but that is fully priced in. What you're looking at is the aggressiveness. And if it's not going to be, if the market perceives that you're not going to have very aggressive cuts, then the dollar is going to find some support vis-a-vis other currencies. So if you, for example, look at the dollar index, we did have that rebound in the markets on Friday, and this was because of having those softer numbers coming in line with expectations, which did buoy the dollar, and now we are seeing it sort of have that pullback on the dollar index. We'll be, of course, monitoring to see if we have, for example, numbers coming in, because this week we have employment numbers from ADP and JOLTS and NFP. So while those numbers come in, it's going to affect how strong that pullback is. But at the moment, we do expect an increase in jobs numbers from the NFP report, and this is likely going to support the dollar index. So as much as we are seeing that pullback coming in, we might more likely remain range bound than quickly retracing from that and continuing in the lower direction. So that is one thing to look at going into this week. The other thing to look at is Europe. And we did see some signs of weakness, especially from Germany, where we saw very weak inflation numbers from the different regions coming in. And this led to a sharp drop in the euro on Thursday last week, and a slight continuation of that. So we are seeing weakness in the euro USD pair, and that justifies the continuation of that pullback that we're seeing over there. So in this case, if we continue to believe that the cuts won't be as aggressive, we might even see on the higher time frame a change in the direction of the euro USD pair. So this is something to watch out for as we head into this week. However, we need confirmation on those key levels for us to continue trading technically against this pullback. Now, that's one thing we're doing. We're trying to justify, we're trying to look at the technicals based on the fundamental factors. And in this case, we're trying to gauge whether this is a pullback or an actual reversal of that uptrend that we're seeing. The next thing we saw is gold, which remained quite range bound. Of course, we said that as gold went higher past 2,500, demand sort of started to reduce because we did see it becoming more expensive. So the one thing that tapered off gold from going even higher, number one, was demand, and number two, prospects of the dollar strengthening a bit. So if we continue seeing that, then we might have room for gold to go lower. Remember, we are still range bound, and we might need to look at those technical levels. For example, that support zone over there, so that we know If it breaks it aggressively, then definitely you are going to feel some of those imbalances it left when it was in an uptrend. So that's one thing you're going to look at. However, if the readings come in, for example, on Wednesday and they continue to disappoint, then we might have room for gold to go slightly higher from the current levels. So this is one thing we'll also be looking at as traders. Having said that, thank you for tuning in to this episode of the Market Watch series where we cover the charts. And if you want to trade any of these instruments or assets, the link is in the description, and see you in the next one.